Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened last week and what does it tell us about the coming one. I do this show every Sunday night, broadcast at or before 10 o'clock Eastern Time. Archived on YouTube. It's under the channel L.A. Little. You can catch me there anytime, any place, on any device. As far as these markets, it is up and away. Last week, not nearly the kind of push that we saw before, but still sideways on the OTC issues. The listed issues pushed higher. The market's still not giving any kind of signal that it wants to give it up. If we pop over to take a look at these indexes, tonight's going to be kind of a brief message here, and then I'm going to segue into MTTF and talk about it a bit. But essentially, there is nothing out here to tell us a pullback is in the cards. The only thing, if anything, to tell us that is the extent with which this market has moved higher without any kind of an interruption. I mean, that straight up angle, you and I both know you need an angle something like this to continue over a longer period of time. You can see the difference here between that angle, right, and the one you see here. Very different picture. That means that this market at some point needs to consolidate, needs to work sideways, needs this angle to move from where it is to something a little bit more sustainable. Something like, that, for example, gets you a little bit farther, and then over time you can get a little bit farther, and eventually you get to an angle you can sustain. Right now, unsustainable, yet not coming in, and that's just a function of the fact that we're in that part of the year. We had earnings that were okay. Most importantly, we had central bankers that came in again and said we're going to take equities higher through currency devaluation. And we've talked about that before. I'm not going to go over that again, but that is really what's happening. If you look at the weekly charts, daily charts you just saw strong. Weekly charts, breakout here. We're looking at the S&P. So it broke out on the daily, broke out on the weekly. That's breakouts on multiple time frames for the S&P 500 and on the monthly new highs. The other key thing, and we'll get into this in a little bit, is the MTTF. And we're going to talk about what is the MTTF, which is this number that you see underneath here. What does it mean? And why is it so bullish right now, the way it's setting up? As far as rest of the equities, Dow Jones pushes to new highs. NASDAQ, NDX, Russell, these all are doing the same thing, and that is that they are consolidating. 6 days now over the highs. And the key thing that's starting to happen on most of these consolidations is that you're getting the retest, as you see here. It's coming back in, retesting. This is a bullish retest, regenerate situation. In other words, you broke higher here, so that makes it bullish, right? So you have a bullish case going on. That's a bull move to the top side. Now it comes back, and it's going to retest, and we're going to find out if those bulls want to step up and buy or not. And so far, that's exactly what they're doing. They're not giving it up. That sort of action is what regenerates prices even higher. Given the extent of the move, this testing process could go on for quite a while, and you could actually see a pullback up underneath here that fails at some point. That would throw it into a range trade if it does. But so far, they don't even want to give it a range trade. They want to stay bullish, and they want to stay strong to the upside. And so for right now, until we get evidence that something else is going to happen, we have to assume that any and all pullbacks are probably going to be bought, just as they have been so far. And those any and all pullbacks so far have been intraday. There's been nothing on multiple days, right, in terms of a pullback. I mean, just look at this chart. You had one day, one small day, and it ended up being a doji and wouldn't stay down. That's the way it looks here on the NASDAQ composite. The NDX looks almost identical. It's just a little bit stronger. And if we go to the Russell, Russell, same thing. Russell's going to go back up. It also is retesting, regenerating. It's going to go back up. It's going to try to take out the high as well. And if we look at the Russell on a little bit longer time frame, it has even higher highs up there still. So right now it's trying to take out this swing point. If it does, that's going to turn it bullish, and it's also going to reset its trend from sideways to bullish. We'll talk about the MTTF here in a little bit. Moving over just so we can get a synopsis of where we're going this week or what it looks like. You know, the only thing that I see from a technical perspective that is concerning is that here's a chart. You're looking at the weekly of the Russell, which is the weakest of the U.S. stocks. Here's the weekly on the emerging markets. You can see the push up here very muted compared to the push up in U.S. equities. Some of that probably is money flow here as a result of the currency situation. There may be some other issues that are driving that, but certainly it's a different picture in this market than it is in our market. And if you go to something even farther out in terms of more equity risk, frontier market is probably about as risky as you can get. And here you can see a definite risk-off situation starting to take place. That, if anything concerns me, it's in these markets. Nobody wants to take huge risk, and you even see that, if you think about it, you even see that in the equity markets in the U.S. And what I mean by that is, what are the strong markets in the U.S.? How about utilities? How about, you know, the safety XLP, this consumer staple stocks? Folks, why are people buying these? Well, they definitely pay good dividends, but they're safe. They're big conglomerates that are safe, or at least they're viewed as safe from an equity perspective relative to the safety of other equities. That sort of safety is taking place even in our markets as well as the overseas markets, where the risk off seems to be still in effect. And why is it risk off? Well, so much of it, I do believe, is because of the currency situation. If you start looking at some of these currencies, and I'm just going to flip through a few of them. Here's the British pound, and then this is daily charts, new lows. The Canadian dollar pushed to new lows. It got a bounce on Friday. The FXE, the euro, pushes to new lows, little bounce on Friday. The yen, we know, got crushed off of the central bank action there. I mean, you just go across the board, it's the same on all of them. If you flip around and look at the other side of it, it's the dollar pressing new highs. That's a devaluation of currencies. That devaluation of currencies causes shifts in global asset allocations away from other markets into the U.S. And that's putting pressure elsewhere equity-wise and putting pressure on our markets to go higher. Okay, so what else is happening? World markets. We just talked about the more risky ones. If we look at the safer ones, I wouldn't say safer, but a little bit more mature ones. For example, if we go to Europe, look at the French CACs pushing higher here. And let's pull this out of the way and look at the weeklies. So the CACs makes a big low, pushes higher. It's doing a retest regen off of this low. That top 42.28, the close 41.88. So you can see it hasn't gotten over it. It's going to still try to regenerate lower. The DAX, same sort of situation, coming right up to the top. Broke this swing point low. This is the lowest one, 92.25, and it's over it at 92.91. But right, just barely over it, over and under on a weekly in terms of the bar. So those are the more safe ones. If we go over to Asia and look at some of those, you know, here you've got currency situations. You've also got weakness in China. So the Hang Seng, the currency situation in the KOSPI, the Korean stock index, the 8 shares for China. All of these are struggling more so. The only one that really has been goosing it has been the yen, going south and pushing the Nikkei higher. Taipei, more of chip country, just hanging in there, but nothing special. And if you look at the resource countries like the All Ordinaries, coming back up to try to test on the top. Again, it's currency devaluation taking place there as well. The Brazilian index, you know, a little bit of a bounce, but that one has the politics keeping it from going much higher. And the S&P up in Toronto, that one also pushing up, but it's a weak bounce comparatively compared to most of the countries. These resource countries are struggling, and we know with a stronger dollar, most resource commodities, if you will, are going to be struggling in terms of price, which puts pressure on those countries producing those commodities. And that's, I believe, what you're seeing here. Part of that is also China not being the big growth engine that it has been for so long for resources. So world markets, about the same, not much weaker, not much stronger. Domestic markets, of course, very strong still. A little bit of risk in those frontier and EEM type markets, more risky markets. And dollar still strong, and that's going to be a big part of what takes place this next week. If I put it all together and I ask myself, okay, what can we expect? Well, you know, you can expect a pullback at any point, but if you look at the sectors and you look at the indexes here in the U.S., there's nothing in the cards to tell us that we're going to try to go lower. And matter of fact, I want to kind of pinpoint and highlight that through a little bit of a talk here on the MTTFs. Now, the MTTFs is something that I created as part of the work that I did in Neoclassical. And so if I look at, let's put up the S&P 500 as an example. If I look at the S&P 500, you know, this is the trading cube. And in this particular case, there's nothing, you know, there's not a sector for it, and there's not a general market for it. It is the general market. So you really just have one row you're looking at, which is the qualified trend across these time frames. Short-term, intermediate, and long, where this is daily, weekly, and monthly charts. What do we have here? Well, we have trend. If we look at the trend, we have a suspect bullish, confirmed bullish, suspect bullish. The only one that's extended, of course, is the long term. And why is that? Well, because we've had a huge run up, uninterrupted, no pullback whatsoever in terms of size for a very long time. And that long time is like multiple years. We're talking 5 years now almost. If I pull up the S&P 500 chart, bring the monthly chart in and let you look at it, the last time you reset was way back in 2009 or so. So this thing has been bullish now for at least 4.5 years. That length of time, if we go in here on the GSBC, if we click on this, it's going to pull up what that looks like. It's 47 months now that this thing has been going higher. That's what that tells you. It also tells you that the cumulative probability of a trend transition, a failure of this trend, is 91% at this point. Now, the reason that's important is it tells you that you're in the late stages of a bull market. It doesn't say it has to fail. It's not a timing tool that's, precise, especially when you're talking about monthly bars. But it is something that tells you, hey, folks, at some point, it's going to be an issue. Now, we saw that recently here with the intermediate term time frame. Until we reset on the intermediate term time frame, and if I bring in the weekly chart again, we had pushed higher to where this was up all about, I think it was about 85–90% as well. It finally got the reset. It broke this swing point low. That was this break. You can see the arrow down here. Now it's pushed higher. It's 3 bars into that push. That's what this MTTF will tell you. If you click on it, bring it in, take a look at it, 3 bars higher, 1.5%. That's where it is right now. Cumulative probability of failure on the very next bar. If you take it forward and you say, okay, how many bars can this go before it's just a coin flip? Well, in this particular case, it'd be about 24, 25 bars. We're 3 in. That's 21 more bars. That, folks, is 5 more weeks. 5 more months to get to that time. So you can go 5 months before you get to just a coin flip on the MTTF. And if you bring it in closer and you look at it on a daily where it moves faster, right? How long will it take there? Well, you're on 7 bars now. Coin flip here is about 26. So you can go another 19 bars, another, what is that, 5 weeks? So we can go another 4 or 5 weeks before we get to the point where this is going to be not overbought, but at least the probability is going to be 50-50. Right now, the probability is very, very low that you're going to get a trend transition back to the downside. That's what it's telling you. That's why, over the last, if you've been listening to me for months, at least 2 or 3 months ago, I kept bringing this up and saying, at some point here, this is going to be an issue. And in fact, it did finally raise itself up, do what it's supposed to, reset. Folks, this will also happen on that long-term time frame at some point. Again, we can't use it as a short-term timing tool, but we can look at it and know that at some point that is going to get reset. It has to, right? Trends only go for so long. They do reset. This one is extremely stretched. We know that. We know we have to keep our head up, keep our eyes open. But right now, these are the ones that are driving it, and these can go higher for a longer period of time. And that's something you want on your side if you're long and wanting to stay long. And right now, I suspect that's where you want to be in this market. This trend, strong, strong, strong. I mean, as strong as they get, folks. I haven't seen one like this since the 90s. And they don't happen very often. So enjoy it. If you're on it, stay on it. At some point, we'll have to pull in our horns again, just as we did before this one dropped. But until we get those setups that tell us that, there's no reason to get worried and think the world and it's going to come crashing down on you. It's just not in the cards yet. It takes time. If you remember, I was talking about, back when we were down at this price point, I was telling folks, hey, it's the bounce that counts. The first move off the highs is not the one that kills you. It's the second move off the failure. We don't have a failure. We got new highs. This market wants to go higher. I'm LA. That is your weekly wrap. I hope it is useful for you as it is for me. Tell a friend, tell two. You have the ability on YouTube to pop in here and to tell others about us. So I'd be more than happy for you to share this with a friend, share it on your Facebook, share it wherever you can. Help us help you. I'm LA. This is, and it was your weekly NeoTA wrap. Have yourself a great night, a great week. Take care.